What's going on, everybody? Mo Zulfikar here with another episode of the 5 Minute Show where I break down market concepts in 5 minutes or less. Today, I want to talk about something that isn't a data point or it isn't a chart. It's a behavior. Because right now, we're seeing type of excitement in the markets that deserves some attention. Let me be very clear. I'm not calling a top. But when markets get loud, risks get quiet, and that's when investors usually get hurt. So let's dig into it. Recently, Wall Street Journal wrote an article about how retail traders are showing up at gatherings like a concert, cheering, chanting, celebrating risky trades, and lifting up CEOs of certain brokerages like they're rock stars. To me, it's really entertaining to watch, but the behavior is a classic sign of market euphoria. And euphoria is when people start thinking that nothing can go wrong. When losses feel temporary, when risk feels normal, and when everyone stops asking basic questions because everyone else is making money. Every cycle has moments like this, 1999, 2006, 2022, different assets, same psychology. You see, the problem with euphoric markets isn't the price action, it's the mindset. Here's what tends to happen. People stop respecting risk. Due diligence goes out the window. Investors pile into, things they don't fully understand, and everyone feels like a genius until they're not. Again, let me make it very clear. I'm not saying we're at market peak. I know calling tops and bottoms is a dangerous game. People who tried, have gotten destroyed. So what I'm saying, don't take it as a buy or sell recommendation. This is not a financial advice. This is simply warning about behavior that I see happening. You see, complacency is very sneaky. It shows up when investors are saying things like, markets always bounce back. Everyone else is doing it, so I should too. I can handle the risk. And the best one, it's different this time. Usually around this time is when people load up on leverage or jump into risky trades with money they can't afford to lose or treat investing like entertainment or gambling. But here's the truth. Market doesn't care how excited you are. They don't care about what the crowd thinks. And they don't reward hype. They reward discipline. Now let's bring all of this back to something practical. Not every investment fits every portfolio. This is something people forget in euphoric environment. Just because a trade worked for someone else doesn't mean it fits your goal, your risk tolerance, or your financial obligations. Your portfolio is personal, your risk appetite is personal, and your responsibilities are personal. And please, I say this every time. Never bet your rent. Never use your money you need for bills, food, or essentials. So here's the bottom line. I'm not calling a top, and I'm not saying sell everything or buy whatever. But the behavior that's happening these days matters. When markets feel like a party, when people start acting like losses don't exist, and when risk disappears from conversations, that's usually when you gotta step back and watch what's happening. Excitement is fine, learning is great, participation is important, but stay disciplined, do your due diligence, respect risk, and stay in it for the long game. All right. Thanks for watching the 5 Minute Show. If you want deep breakdowns, chart research, and so on, check out zulfikarresearch.com. Like the video, subscribe to the channel. I'll be back soon.